Ross Maxwell has been trading the markets for more than 20 years. He's become a passionate mentor to struggling and frustrated traders who are looking for one-to-one help from a man who knows how to make consistent returns and cares about his students. Ross, how are you doing? Welcome to A Trader's Life.
Thank you very much for having me. Pleasure to be here.
Good. So I see you came from Gravesend, grew up in Gravesend, grammar school, and then went on to, what was it, straight into trading or uni?
No, so I left school when I was 18. I didn't go to university. Obviously, a lot of my friends took that route, but I also had a few friends that had actually left school at 16 when you could leave at 16, and they were already in the city and they were earning money and doing their work there. One of them was actually a runner on the floor for ICAP. And it was a passion of mine to get into that sort of city life, into the financial services and stuff. So I left school at 18 to pursue that sort of career in that avenue sort of thing. So I didn't go straight into trading, obviously, because I didn't have any qualifications or anything like that. But I started off in sort of like the back office, doing sort of like settlements and sort of like more of the admin stuff. But made it known that my ambition was to maybe get onto a trading floor or a trading desk. So the company that I worked for, I worked through them, made myself sort of noticeable, worked hard. They put me through so that I could get what was then my FCA qualifications, and then, no, actually that's wrong, it was the SFA then, sorry. And got those qualifications, went through and started doing sort of like some middle office work, and eventually got onto a trading desk when I was about 21, something like 21, 22.
So when you left school at 18, was the ambition to go into trading specifically, or was it just some area of the financial markets?
Yeah, so it was really to get, the real ambition was to get onto a trading floor and actually start trading. Ultimately, I wanted to be inside the financial services. I remember it was a careers day at school when I was about 16. Maths was always like a strong point of mine, and sort of like I remember speaking to the careers lady, and I said to her, like, I'm good with numbers and I want a job that pays well, basically. And she was like, oh, you want to be like a stockbroker or something like that then. So I guess that was like the first like seeds being planted on that sort of journey. And I think back then it was always an ambition to sort of get into trading. I didn't have an idea of what it was. I don't come from, like, my family's not a background from that. My family's sort of like in construction and stuff and that sort of side of things, which was something that I wasn't really interested in. I'm not the most practical person. Numbers was more my sort of like forte. So I wanted to get into it. I didn't really know too much about the trading world, but that was sort of like the area that I wanted to get into from quite a young age.
So you got going and you were like, 10 years in various institutions before you went solo, as it were, as an entrepreneur, is that right?
Yeah, that's right. So I started off with a company called Refco, which turned into Marex. From there, I started trading South African equity derivatives. So we then our desk got bought out by BGC, which is where I actually spent the rest of my career in the city as a trader. I did have some back office experience with like Deutsche Bank, Royal Bank of Scotland, but my main trading was with Marex and BGC. So I spent 6 years, about 5 years in London with BGC, then moved to Hong Kong, spent 2.5 years with the Hong Kong office before moving back to London. And about 18 months after moving back from Hong Kong into London, that's when I decided to quit the city life and become like an independent, or pursue it like a career as an independent trader for myself, to just give myself like that little bit of flexibility, I guess.
What were some of the key takeouts and lessons that you learned along the way during that phase of working for institutions?
I think the main thing which has really stood me in good stead was the risk factor, So my clients were the likes of Goldman Sachs, Deutsche Bank, Citibank, the big banks. So I was on the broker side, so I was executing, I was trading, I was going and getting the best price. It wasn't quite like that middleman broker where you're the middleman between two clients. Like I would get the orders in the morning, and it was my job to go out and trade that during the day to get the best possible price over the course of the day. So I think that as well helped me in terms of reading the markets, reading the fluctuations in the markets, trying to get a read of, understanding that even if you're just buying on the buy side, the markets don't just go up in a straight line, they go up, they come down, and you've got to be able to monitor that to be able to get the best prices and things like that. So I think, that understanding of the markets and fundamentally the risk side of things, we had risk departments that would be on us to make sure, if we had any positions open or if we had large positions on the books or anything like that, the risk departments were on us to make sure that everything was in line and we wasn't taking on too much risk and things like that. So I think that was the thing that really probably stood me in good stead.
So was that shares and CFDs?
So we did do CFDs. So my main focus, as I say, was this South African market. So we traded South African futures and options. So it was a South African version of the FTSE 100, the S&P 500, which is the Aussie Top 40. So that was my main focus, and we did options on that as well. We did trade some CFDs. We did some sort of arbitraging, which led to some CFD trading and some forex trading to hedge the currency. But my main focus was on the futures and options of the South African all shares.
Yeah, I've never been in any of these sorts of places except as a copywriter, but what kinds of lessons did you have? I mean, was it kind of on the job, as you get the feeling from movies, you're a young trader, you're just thrown in and people come around your desk and tell you to do this, to do that? Or was it more like, right, today we're going to put you in this classroom, so to speak, Ross, and you're going to learn about options? I mean, how did it work?
Yeah, for me, it was very much on the job training. I think if you work through the banks and the institutions, you go through graduate programs, and maybe there's a little bit more sort of study type or academic type training. And obviously you probably need higher qualifications than I had at that time to get onto the graduate programs. But for me, it was very much on the job training. I was very lucky that my boss at the time, my mentor, I guess, he was a very experienced South African trader. He actually was the story goes that he was the person that placed the first options trade on the South African exchange. So he had been around for many years. He had done the job that I was going in to do, so it was very much on the job training for me, understanding what the options were. I'd had sort of 3 or 4 years, or probably 3 years, in the back office and in the middle office to get to know what a future was, what an option was, and sort of the basics around it. So I had some sort of like base knowledge as well. So I wasn't going in completely cold. And I think, again, maybe that was like a really good way of doing it as well, like going in, starting off from the foundations basically, and understanding not just that I execute this trade and there it is, there's a life after the actual execution of a trade, certainly in London and stuff as well, like when you're dealing with the institutions and the bank. So it was understanding all of that. So it helped with like the client journey as well. If there was ever an issue, I had some knowledge of that side of things as well as just the execution sort of thing.
Yeah. What prompted you to leave and go on your own?
To leave the city and the security. And so basically it was to get some more freedom, get some flexibility in my life. Like I was working South African hours. So when I was in my 20s, it was brilliant. Even in Hong Kong, I was like starting work at 2:00 in the afternoon, finishing work at midnight. I was still trading South African hours. And whilst it sounds difficult, actually, I mean, I'm not sure if you've ever been to Hong Kong, but Hong Kong's the best city in the world to do that in, because there's always someone to, even like Tuesday night at 1:00 in the morning, there'll be someone to go and have a drink with. And in your 20s, that's absolutely fine. But when I got back to London and I was getting back up at 4:00 in the morning, it started to catch up with me a little bit. And I was still, don't get me wrong, relatively young, like early 30s, 30, 31, but I just started to feel it a little bit more. And I just had this idea in my mind. I was like, right, I don't have a family at the moment. I want a family, but at the moment I don't. So I don't have the responsibility from that. So if I'm going to make a change, it has to be now. So although I wasn't at like a critical point in the career where I was feeling like run down, burnt out, I could feel that if I carried on, I felt that I didn't want to do that job, be doing that job in 20 years' time, and feeling that burnout and stuff. So
especially if you're waking up feeding kids or something.
Yeah,
you know?
exactly. So I made the choice to quit and give it a go at trying to become a self-made trader. I guess I was still young enough and I had the experience that if it didn't work out, I could probably go back and get another job. But it was something that I felt I really wanted to give myself an opportunity for myself, for my future family, and my health and everything, and the flexibility and freedoms that it would give me. So that was sort of like the catalyst for it, and thankfully it worked.
Were you already trading your own personal account maybe now and then while you were still in a full-time job, and then just kind of racked that up and gave it more time?
Yeah, so I was trading a little bit beforehand. I think we was limited to what we could do because of compliance and everything like that. So we were very limited in what we could do from a personal point of view. But obviously being in the markets and having that sort of thing, you're always going to have a little thing. But actually it wasn't a case of, right, I'm going to start day trading now and see whether it works with the security and then ramp it up. It was very much, right, I'm doing this, now I'm going to try and do this. There was quite a big, it was a very big period of re-education, because although I'm looking at the markets, I'm looking at similar assets and everything like that, the way that I'm looking at them, the emotional response that I have when I'm trading, everything is completely different. When I'm in the markets and, you know, as I say, like the big institutions are my clients, so I have the order flow in front of me. Like I know what the order flow is in the market as to give me an idea of which way the market may head that day. When I'm an independent trader, I don't have access to that information, so I have to rely on my analytical skills, my sort of like chart reading skills. I'm very much a technical trader. I don't pay attention too much to the fundamentals. I know when they are and when they're going to happen, but I don't really pay too much attention in terms of I don't have obviously I have an idea and an opinion, but I'm not basing my trading decisions on what I think the index or the equity markets are going to be doing next week, next month, or in 3 months' time. I'm very much like looking at the charts that day and making my decision based on that day. So it's very much a different way of looking at it. So I had to go through that period of re-education because it was a very different way of trading.
Okay. How different? I mean, what we're using, like the typical indicators like moving averages or MACD or any of those fairly old things that...
Yeah, exactly. So when I was working in the city, it was very much just chart-based, VWAP, those sorts of indicators. There wasn't really, I wasn't looking at MACDs or anything like that. When I flipped into the retail space, I did start, I mean, my retail journey was probably similar to the way that most retail traders start out. Like I've lost access to a lot of information, which obviously you can't have, like from a regulatory point of view, you can't have access to that information. So I was looking for ways to substitute that. And when you look online, it is MACDs, moving averages, stochastics, RSI, you know, all of those Bollinger Bands, all of those normal indicators. And I'm very much, the very first strategy, I remember it, I read a book and the strategy was based on Bollinger Bands. So that was my first one. As I've transitioned, the more experience that I've got, the better that my technical reading skills have got. I don't use any of those indicators anymore. Like moving averages, I have those on my charts. In some of my courses, because I now run an education company as well, I teach, I sometimes use Bollinger Bands, but more of a visual guide than an actual sort of real way to trade. But me personally now, it's very much a naked chart with just I've learned to be able to identify where that order flow is in the market, which is where I now base that's the strategy that I've developed, which is now my strategy. But way back when I very first started, it was looking at those indicators and stuff that is rife in the retail space.
And so did you have some nasty experiences relying on Bollinger Bands that made you think, maybe not?
Yeah, I mean, I think Those horror stories that I've heard through my coaching and everything like that, where people blow accounts and things. Fortunately, I think I'm a very risk-averse person naturally, and I think that's helped me obviously as a trader. But learning about the risk management and how important that is in my time in the city, I've never actually blown an account. I've had drawdown periods, of course, and I've had to deal with the emotional side of those sorts of things. But yeah, of course, I've gone through strategies where you experience bad drawdowns and those sorts of things. I mean, when I very first started trading, I don't know if you remember the binary options. The binary options were still a thing then. I actually started looking at some of those things as strategies and quickly realised, yeah, no, these are not what you want to be getting involved in, because a lot of even the spread betting companies like IG back then facilitated the trading on binary options. So yeah, those were probably the hairy days.
Yeah, a lot of people lost a lot of money, didn't they?
Yeah, and there was a lot of scams going around with the binary options and stuff, obviously before they got properly regulated and stuff. So yeah, I would say those were probably the scary moments early on in my trading career, but as a retail trader. But fortunately, I think because my risk management's always been fairly solid, although you may damage your account, I've never had that sort of blow up the account and real sort of horror stories sort of thing.
So give us some key pointers for good risk management.
So the key pointers for good risk management, I think understanding your strategy, what the expectancy rates are, understanding what the drawdown period is as well, what the possible drawdown period is, because if you are potentially going to have a drawdown period of say 20R, like in terms of your like whatever you risk per trade, having a 20R drawdown period. If you're risking 2% per trade, emotionally you have to deal with having a 40% drawdown on your capital. Now, I know I wouldn't be sitting very well with that and being able to carry on and making those decisions. So I have a risk determined on my account, my max risk on any one particular trade, which allows me to trade based on my historical drawdown periods to know what that number is to allow me to keep on trading. So I think it's being consistent in your risk, understanding the frequency of your trading and how it plays out, and therefore what the number is, what that percentage risk per trade is, that allows you to carry on trading through the emotional issues that you experience during the drawdown period. Personally, I would recommend no more than 2% on your account on any one particular trade, and that's if you're trading less than 10 times a month. Me personally, I'm in the sort of like 0.5 to 1% per trade bracket. That's where I sit. I never risk more than 1% on a trade. Scalpers, if you're trading like several times a day, you may need to risk as little as like 0.1 to 0.25% per trade, just to make sure that even if the markets are running against you, or if you're a little bit off, like, you know, sometimes we have these periods where we're just a little bit off in trading, that you're not going to cause too much damage to your account before you can reconcile it, basically. So yeah, having a really sensible amount of risk per trade. Focus on, basically one of the things I always say to my traders is just focus on the risk, not the rewards. Don't think, oh, if I risk 2% per trade, I can make 6% on that trade, rather than, oh, if I only risk 1%, I'm only going to make 3%. It's like, actually, you need to focus on what you're risking, because if your strategy has an edge and you're risking sensibly, then the profits will take care of themselves statistically over a period of time.
And what sort of timeframes are you using?
Me personally, so I've always considered myself a day trader since I've started from the retail space. And I think that probably psychologically or emotionally comes from my time in London, because I would get an order in the morning, I had to have that trade played out and closed by the end of the day, and then I would get another order the following day. So I think maybe that's probably why I went that route as well. So yeah, I trade 1 hour and 3 minute timeframes is basically is a timeframes that I look at now. When I used to trade reversals, I was very much executing on 3-minute, 15-minute, and 1 hour time frames. But now the way that I trade is very much looking at the price action, and I place limit orders. So I'm basing that on sort of like 3-minute and 1 hour price action.
Okay, and will you just take in one direction and then close out and wait for the retracement, or will you also trade the other way?
I will trade, so basically I'm very much base my strategies around support and resistance. So I will identify where the key level of support is. I will identify where the key level of resistance is. Sometimes I may have 2 resting orders in the market, depending on which way the market will move. I may get filled on both. I may get filled on one, but not the other. And I may not get filled on either, you know. So I identify where I believe that liquidity is, where that institutional liquidity is, because that's where I want to be following. That's where I want to be placing my trade, is where they're going to be in the market. And I place my limit orders there, and I just wait for the market to come to me. So as I say, I can identify where the support and resistance is. So I may have a buy order and a sell order in the market at the same time, but depending on where the market will move will depend on whether I get triggered into one, both, or neither trade, sort of thing.
Yeah, I just always a bit apprehensive about limit orders, because, you know, sometimes you'll get a move that tips your order,
yeah,
you're in, and then it goes completely the other way.
Yeah,
and
yeah.
it's like, oh God. Yeah.
Yeah, so I mean, I think certainly from when I very first started, I don't think I had the skill set, to be honest, to be able to trade limit orders. I think that's come as I've developed my strategies, as I've developed as a trader, as I've developed my analytical skills and everything like that. And you know, there is this the phenomenon in the market, you know, like the stop hunting that goes on, like, and that's always a danger of limit orders, where you place a limit order and the market goes, just clips your stop, and then reverses and does exactly what you want it to do and stuff. And I actually teach why this happens in a lot of my courses, because it's actually just market function, really. And if we know this happens, then we can, one, take advantage of it because it's a repetitive characteristic of the market, but two, also we know and we can make sure that our stops are not in obvious places. So if we understand how the market may move, then you know we can work out where our stops can be, whereby it's not going to be obvious, because that's all the market does. The market moves into areas where it's going to be obvious stops, or on the flip side, like obvious orders for breakout opportunities and things like that, because it just wants to grab that liquidity. I call them liquidity grabs, because it's just grabbing that liquidity before it's going to move on in the other direction and do what it wants to do. Exactly, yeah. So, and that purely is just the market creating its function, basically, to facilitate trades. So yeah, it's something that I've developed. Certainly, probably when I very first started, I wouldn't have had the skill set to be able to identify those areas, but it's something that's very much grown as I've grown as a trader as well.
Yeah, what are you looking for to find these areas?
Purely support and resistance, so it's like looking at key swing areas in the market, identifying impulsive pushes away from certain areas, looking for multiple touches, both as support and resistance, because if we can see all of these things, then that means there's been active participation from institutions in the past, because it's the institutional flow that causes impulsive moves. It's institutional order flow which causes these swing highs in the markets, and like these clear swing highs and lows in the market, because it's their order flow which will drive it away from that level, and it's their order flow that will use it as, you know, resistance becomes support, support becomes resistance. And again, it's another thing that if we know liquidity is there, that's another reason why the market comes back to those areas. It's drawn back to those areas because, again, it's that facilitation of trades. It's creating the market function to facilitate more trades because it knows there's more liquidity there. So once we can identify that the market knows there's liquidity there because it keeps getting drawn to those areas, then those are the areas that we can look to trade from.
Are you familiar with the ICT teachings and fair value gaps?
I'm not familiar. I hear them. I've heard of them a lot, and like order blocks and all of these sorts of things. I've never learnt them. I've never studied them, but I've had a lot of students who have come to me having studied those various bits and pieces and sort of said, oh, I'm looking at this, and oh, that bit that you teach is very similar to this part of like smart money concepts and all of this sort of stuff as well. So no, me personally, I've never studied them or I've never looked. But I have my own theory, and I think there's some sort of crossover and some sort of similarities to them. But yeah, I'm not an experienced on them because I've never really studied them myself.
Yeah, I mean, a lot of it seems to be more or less what you're saying, just using different language, in as much that you've got liquidity pools and therefore a certain imbalance rather, in the market, and therefore price is likely to go back up there to close that gap and also go a different direction.
Yeah.
To use that liquidity. Yeah.
Yeah, exactly. And I mean, ultimately, that is it. The liquidity, the institutional liquidity, as I said, is what moves the market. So what I'm trying to do, and I'm guessing this is what sort of like the ICT and smart money concepts and stuff tries to do as well. And I know the order blocks is basically trying to identify where that liquidity is, because as I say, that's where you want to be positioning yourself with that institutional flow. That smart money basically is where you want to try and position yourself with.
And what assets do you trade these days?
So I trade predominantly indices and FX. Again, I think that's just, that was my experience in the city. That was what I was used to. Although I don't trade the South African index anymore, I trade the DAX. I'd probably say 50% of my trades, if not more, are on the DAX alone. I do some on the FTSE, the S&P, and then like major FX crosses, so US dollar denominated crossing pairs and things like that. But I think the reason for that is very much, that was my experience in the city of trading indices and options and stuff like that. So it was quite a natural progression to look for indices when I very first started in the retail space, and as I've grown, I've then transitioned on in the last 4 years probably to trade, 4 to 5 years to trading FX markets as well.
Yeah, I imagine you tried a few of the indices over time. And why did you gravitate to DAX? Because I'm the same actually. I prefer the DAX to the others, but why for you?
Yeah, so when I very first started, I actually went through like a few different courses and stuff as well. And one of my early mentors was very much a FTSE trader. So I started sort of like looking at the FTSE and the DAX alongside that. And obviously, in the afternoons, you train the US session, it was very much like the Dow Jones and the S&P 500 and the NASDAQ. So those were sort of like the markets that I was watching, and I've just gravitated towards the DAX. I just love the way that it moves. It's clean, it respects levels quite well. Like the FTSE, the S&P 500, they're quite slow moving markets. You can see a lot of overlap and choppiness. You can get like months and months where they're in sort of like these sort of really choppy ranges, whereas the DAX just is a little bit cleaner. I think you need to trade the DAX, you need to be experienced. I think you have to have your risk on point because it moves a lot quicker. So, if you go offside, you need to be able to cut your risk and manage your risk properly. If you're one of these persons who gets that like the loss aversion, or trying to avoid the loss and moves to stop and takes on more risk, the DAX isn't for you because it can kill you in one trade. But if you can get your risk right on the DAX, it's like, it tells you whether you're right or wrong. It doesn't suffer falls, if you know what I mean. It's like, right, you're either right or you're wrong. And I think that's why I like it. It moves quickly, so your holding times are can be quite short. Like a lot of my trades, I'm probably in and out within sort of 20 minutes to half an hour. Certainly I don't hold trades over longer than one session. Very, very rarely would I hold a trade past one session or into a second session, and I never hold them over a weekend. So again, I quite like that because it just gets me in, gets me out, and I can then come back the next day with a clear mind, sit down, unbiased view, and go again.
Going back to what you were saying earlier about risk management, 2% on each trade, it makes you realise that the idea of getting rich quick from trading, unless you put in a huge deposit of your own money, is just absurd, isn't it? Because you on 2% on any trade, you're not going to make a huge amount. You're looking at small amounts if you've got, say, a 5k or even a 10k account.
Yeah, exactly. And I think this is the thing, is the one thing that I sort of pride myself on, or try to get across in sort of like my courses and on social media. Like, I'm not one of these guys that sort of flies around in private jets and drives Lamborghinis and stuff like that. I think it's the unrealistic expectations of the general retail trader when they come in, because, most retail traders, myself included when I very first started, are undercapitalized to be able to achieve what they want from trading. Because as you say, if you sit there and think like, say you are starting with £100,000 account. Okay, so say you're fortunate enough that you have 6 figures to invest and have £100,000 account. Now, if you're making 2 to 3% a month, which translates to 25 to 35% a year, which is really good returns, that's 25 to 35,000 pounds a year income. Now, that's not to be sniffed at by any means, but people seem to think that if you you can come in and you're going to be a millionaire. Now, earning 25 to 35 grand a year, you're not a millionaire, like far from it. So that's if you're fortunate enough to have £100,000 of capital behind you to be able to trade. So that should give you an inclination about what you really need in terms of capital behind you, which the general retail trader doesn't have. So it's certainly, when you're starting out, it's having realistic expectations. It's the way that I teach my clients is because the majority of retail traders, as you say, they start with £5,000 to £10,000 accounts. That's generally speaking the rough. Maybe somebody might be fortunate to have sort of 20, 25. Some people may only start with a couple, but it's like, have the expectations that you're not going to be able to replace an income starting with that amount within a year, 2 years. Like, you actually have to focus on the process. So use your account to focus on the process, nail down the process, and then you need to look at other avenues. And that's where, in recent years, the sort of the influx of funding accounts and stuff can really help retail traders get the funding that they need to facilitate what their returns that they want from trading. Otherwise, I've had traders and clients who come to me expecting to replace their income and retire within the next year, 18 months. They quickly realise that's not possible, but they then come up with an alternative plan whereby they may be able to supplement their income, and they accept that that's good enough for them, and their expectations are readjusted to what's a little bit more realistic. Because if you have unrealistic expectations, chasing a dream, then you're trading on emotions, and if you trade on emotions, as I'm sure you're aware, you're not going to get to where you want to anyway, sort of thing. So it's very much about setting people's expectations and making sure they're realistic with what they have, and getting them to focus on the right things.
In your early days as a solo trader on your own, have you had any horrible moments of, oh my God, my discipline is gone, and this kind of, where the hell am I? That confusion that many of us get.
Yes, definitely. So when I very first started trading, obviously I did have some horror moments in the early days, when, although I did have good risk management, and that's why I didn't blow up an account, I think the most I ever risked on one trade, I remember it vividly, it was I was risking about 10% of my account on any one particular trade, and it was very much that revenge trade, or that revenge emotion kicking in. I'd had a couple of losses, and I was like, right, well, if I sort of trade this amount and risk this amount, if I win, then I'm getting my losses back. Now, I remember sitting in that trade, and it was only about, again, I was a day trader, so it was only for about half an hour, but I remember this sick feeling, like this tense knot in my stomach whilst I was in it, thinking like, you're a fool. Like, if this loses, you're now down 20% of your account. And fortunately, that trade won. Now, I say fortunately but I learned a big lesson from that. Unfortunately, a lot of traders, that when that happens, they don't learn the lesson because it reinforces a bad habit. Luckily for me, I held on to that feeling that I felt during that trade. I was like, I never want to feel like that again. So yeah, although it wasn't necessarily like a horror, catastrophic moment, for me that was like quite a big realization, and ever since then my risk has been pretty good, and that allows me as well, the fact that my risk management is so good, it allows me to be not emotionless, because we can never be emotionless, it's just natural for us as human beings to be emotional, but it allows me to stop my emotions dictating trading decisions, because I'm never allowing my emotions to get overrun, basically.
What are some bad habits that new traders should really avoid?
Oh, the bad habits that new traders should avoid. There's how long have we got?
Give us 3.
Top 3 bad habits that traders should avoid. Okay, so jumping from strategy to strategy. Basically not having a risk management plan. You need to have a risk management plan in place from the get-go before you start trading a live account. And I very much teach a sim demo live a series to trading, because it's like any profession, right? You don't, if you want to be a pilot, you don't just get given the keys to a 747 and fly 500 people across the Atlantic. You have to go through training and that sort of thing. So very much that. And also, I think focus on developing emotional intelligence. I think that's a real key. People neglect that part of trading.
What does that mean exactly?
So what that means is we, as humans, we are not built to be traders. Naturally speaking, we're not built to be traders. Every time we go into the market, we put ourselves and our egos under threat, because if we take a loss, the market's telling us we are wrong, and as humans, that doesn't come naturally to us. That's a threat, so it invokes emotional responses. So it's very much about building up emotional intelligence to stop emotions dictating your trading decisions, because a lot of the traders that I coach, they're not profitable, not because of a lack of technical ability to trade or understand how to trade the markets. It's generally speaking some sort of form of emotional or mindset block, which is making them do repetitive things which they know they shouldn't be doing, but for some reason they can't stop themselves from doing it. And all that is that they're allowing their emotions to hijack their decision making in their trading. So it's as I say, it's not trying to eradicate. Anyone that tries to tell you to eradicate your emotions in trading become robotic. We're not robots, we're humans. Emotions are a natural part of us. So I teach a lot of mindset stuff in my course. I personally do a lot of mindfulness and meditation. I do that before my trading every single day, because it helps put me in a position in my trading that when I take a loss, or on the flip side, if you have a really good win and you feel this adrenaline rush, rather than jumping into the markets again and feeling that you can't be beaten, you're just gonna win invincible. You're gonna win every single trade. If you do that, then you're going to potentially put yourself and lose that hard-earned profit. So it's being able to recognize that. It's being able to recognize when you feel that the market has taken, you feel frustrated or angry at the market. It's being able to recognize that emotion before you act on it impulsively, and then removing yourself from the situation to be able to do it. So mindfulness and meditation really helps with that. So that helps develop the emotional intelligence to be able to stop your emotions hijacking and dictating your trading decisions, basically. So that's a lot of stuff that I do, and I think that's why I would sit there and say one of the big tips would be focus on that side of things, which a lot of educators don't focus on. They don't really even teach it. And I think a lot of retail traders, when they come into the market, not necessarily that they neglect it, but they're not aware that that's actually a side of the market that really they need to focus on to be able to give themselves the best chance of being successful in the future.
Yeah, I've had to teach myself to sort of blanket every single reaction I have to the market, which isn't necessarily always a loss. It could be you've been watching a real nice setup for 3 days, and then you go to bed and it's happened overnight. And you think, oh my God, I waited all this time for this brilliant move, and it happened when I was asleep. And so you can have that emotional reaction to it and feel really pissed off. But that then colours how you approach the rest of the day, doesn't it?
100%. Yeah, it happens to me all the time, where I will identify a level in the market, and like you say, you can watch it for weeks. And then all of a sudden, it happens when you're not at the screen. You don't leave a resting market. I don't leave resting orders in overnight, because I'm not around to react to what could happen in the Asian session, because that's when I'm asleep. It happens to me all the time. Or the other thing is you identify a level. And where I work off limit levels, I identify a level, and the mid price comes down to the level that I've identified, and then reacts from there. And I haven't got triggered into the trade just through spread. Like I've nailed the actual level, but through spread of the instrument, like I've missed the trade. So all of those things can happen. They're all frustrating, and as you say, they can cloud your judgment on the next trade or the next decision that you make. But that's where the mindfulness and meditation really helps. Because actually, so I do my mindfulness and meditation twice a day. Once in the morning before the European Open, and once in the afternoon before the US Open. And what that also allows me to do is, it doesn't happen often, but it allows me to recognize maybe when I'm not in the right frame of mind to be sitting down into a session before I even get into that situation. So it allows me to sort of sit there and go, yeah, you know what, you are quite likely to make an emotional response today, so maybe we need to remove ourselves from that situation, so you don't sit down for that session. So yeah, that's another really big benefit of sort of mindfulness and meditation is to do that, because it can remove yourself from the situation before you even you put yourself in it, or it can help identify those emotions before they start making the decisions for you in trading, when you're actually in the live environment.
And for you, what does that mindfulness consist of? Well, meditation, you put them together, and they're two things.
Yeah, so obviously the mindfulness is effectively a form of meditation, right? So I actually suffered some anxiety issues sort of 10, 12 years ago, which was another sort of base reason for when I left the city sort of thing. And I found mindfulness then. And it just so happened that it translated and helped me in my trading. So excuse me, mindfulness or meditation, I use it simultaneously, because what I do is, generally speaking, mindfulness, but I use meditation because some people would prefer a form of meditation. And really what the mindfulness does in what I'm doing is it allows me to be present, and it just brings me into myself to analyze myself, because there's so much going on in the world around us and everything, so many decisions that we've got to make, and a lot going on in our personal lives and everything like that. And we don't, in this fast-paced world, we don't ever really give ourselves time to just sit with us
we need to slow down,
who we are. And that sort of 10, 15 minutes twice a day allows me to just sit with myself and work out where I am exactly, without all the noise going on around me or the distractions going on, your phone, the technology. Another bonus tip for traders, keep your phones away from you when you're trading, because you need to be focused on the markets rather than getting a text message and checking your text or anything like that. Really focus on the markets, because there's so many distractions going on around us in the modern world, that sort of 10, 15 minutes of mindfulness just lets me sit with myself and find out where I am today, how am I feeling, how stressed am I, how emotional am I in the zone. So it really just allows me to get into that place and find out where I am.
Yeah, and you teach that within your own course, do you?
Yeah, so I teach that within my own course. That's something that I'm actually looking to expand on. So I teach it in my course. I'm not a neuroscientist. I'm not a psychologist. I'm not like a meditation teacher or anything like that. I have done a lot of self-taught, read a lot of books, watched videos, and got a lot of knowledge from self-teaching myself, both from my anxiety issues and teaching myself to overcome that, but also from how it can affect your trading and the benefits and of that side of things. But I want to start implementing some experts into my courses and stuff as well, to really delve that little bit deeper into it and give people more color. 'Cause I think if you understand why things happen and the benefits of doing them, you're more inclined to do it as well, rather than me just sitting here saying it's helped me and this is what a tip that you should be doing. If you can really understand why, and then you can relate to that, and then you understand the benefits, that means you're more likely to pursue that as well. Because again, mindfulness, meditation, whichever way you want to go, it's not like I'm going to start mindfulness practicing this week and I'm going to see the benefits of it next week. It's something that you have to do repetitively. It takes time, but it can actually physically change your brain state. So obviously it's going to take a little bit of time. So you need to be persistent with it, doing it once this week, once at the end of the week, then leaving it for a couple of weeks, you're not going to see the results. You really need to have the persistence. And I think if you understand why things happen, you can relate to those feelings, and then you can understand the benefits of it. You're much more inclined to be able to persist with the phase at the beginning, you know, where you're trying to break down the barriers and knock through. And you know, just to put it out there as well, like, you can't be good or bad at mindfulness or meditation, right? That's the whole point of the thing, is like, you're just sitting to find out where you are. And when I've had it with a lot of traders, when they start, that they say, oh, you know, I couldn't focus, I just couldn't concentrate on my mindfulness. I'm just like, it's not for me. And it's like, that's sort of the point, is your mind is so busy that, you know, you want to give it the time to just, and it's going to take time to be able to sit with itself. And I still have times now when I sit down for my mindfulness and, you know, my head's off all over the place in that sort of 10-15 minute period. But again, maybe that's one of those things that I need to work out why I'm being distracted, and maybe that's a day that I don't sit down for trading. So you're not good or bad at it, and we all have these times when, you know, there's a lot going on in our lives, and it's just being able to identify when those periods are. So yeah, you when you sit down at the trading desk, you are the best version of yourself. You are in the zone, and you're focused on the markets, because they're unforgiving, right? The markets are very unforgiving. If you want to gamble, you know, go to casino. It's a casino. I always say a casino is much more forgiving than the financial markets are.
Yeah, no, for sure. And how much do you trade? I imagine you do the 8 o'clock in London, and then the 2:30 in the States. Are you trading live with any of your students?
Yeah, so I trade from 8 o'clock in the morning, European Open, till about 10 o'clock in the morning. And then I trade, the US afternoon, so 2:30 till 4. I don't generally trade between 2:30 and 3 o'clock. I'm normally just monitoring the markets. I find that the US Open, not so much on the European Open, but the US Open, that first half an hour is shaking things about a little bit before it sort of settles itself. In terms of trading live, I have a graduate program where I'm teaching mentoring one-to-one. So I teach a maximum of 5 people on that course. They can all come and trade live with me every single day, and then once a week I trade live with my academy students via a Zoom, where we literally sit down from quarter to 8 in the morning. We go through the analysis of the markets. We look at what we're going to look at doing, and then we trade the first half an hour of the session, and then we go away with the plan for the rest of the day session. Because effectively by 9 o'clock, generally speaking, my plan is set for the day pretty much, and then I'm just either managing trades or just monitoring the markets to tweak things if need be.
Okay, yeah. And do you work with any other mentors, or is it just your own outfit?
No, so it's just me with Keyzone Traders. I have another guy who I trade with, who I've been trading with for several years, who I trade alongside, and if I'm away, he helps manage the trades and sort of like manage students and puts like for trades that maybe we're in and things like that. But Keyzone Traders, me, the mentoring side is all myself. I don't have any other mentorees or mentors, should I say, in Keyzone Traders. It's all myself. I like it that way. I did used to work with another education company, and the reason that I left and set up myself was because I very much wanted to have my own ideas and my own stamp on education and the moral way to do it and the right way to do it, and give those realistic expectations of what to achieve and stuff. So I very much like the fact that it's just me, which is why I also only have 5 students who I do the one-to-one mentoring with, because obviously I only have a certain amount of me to go around in terms of time and stuff like that.
Yeah, in terms of moving forward and perhaps scaling up, do you think you might not automate exactly, but have like a membership where you as a student would come to the videos as lessons and you would learn that, and that would be part of the price of your course?
Yes, I already have that. I have 2 courses which are all videos, all online. So I have a beginner's course, which is teaching people, again, just the basics, some basic strategy, some basic mindset stuff. risk, how important risk is, following that sim demo live and trying to take them through that journey first before they go and trade their own live funds and stuff, because you're not skilled. If you're at the beginning, you don't have the skill set to be able to go and trade real money. So it's taking people on that initial journey, and then I have my academy course, which is much more in depth, which is all online videos, teaching people how to trade from the fundamentals, mindset, price action reading, risk, and then strategy as well. So yeah, I have that all in place, and actually something that I'm working on this year is a copy trading service. So a bit like you've probably heard eToro and those sorts of things, where you can follow other traders, where people will actually be able to follow me and my trades. That's something that I'm working on at the moment as well.
Okay, yeah. And how did you get going with that? Did you just start off in a very small sort of way, teaching one or two people who found you online, and then you built up and made that more of a business?
Yeah, so basically, I had basically started doing the mentoring and coaching for this other company that I was working for, the education company. I helped put their education syllabus together. I helped mentor and coach their clients. And as I say, it just got to a point there whereby I wanted to put my own stamp on it. So I left and just, obviously I'd created some material before, so I had some new material, and I had the content in my head and everything, so I just needed to structure that, and I put out those courses of my own material, so I could put my own stamp on everything, and then that's where Keyzone Traders came from. And since then, it's just really getting my name out there. So I do some exhibitions, I do webinars, I do some content series with online brokers and other third-party providers to traders and things, just to give some information out there and really get my name out there as well in terms of brand recognition.
Do you have what you call now a brand, do you think?
Yeah, I think we're getting there. Yeah, Keyzone Traders. Again, so the Keyzone part of Keyzone Traders is because I trade via zones of support and resistance. So we're looking for key zones of support and resistance in the market. So I guess that is my brand. And certainly I think over the last year or so, certainly 2023 helped me build a bit of a brand, or certainly I think I've become a bit more established. People have started to hear about me a little bit more, rather than just me saying, oh, I'm a trader. People have seen me at exhibitions, they've seen me online, they've seen me doing webinar series and that sort of thing, to providing education and stuff to know what I'm doing.
Are you also busy on social media? Like, I've seen you once or twice pop up on LinkedIn, for example.
Yeah, so mainly, so basically I do LinkedIn is one place I am. I am on Facebook. I don't do a lot on Facebook. And I do reels on Instagram. So I do some stuff on Instagram as well, just sort of like, 60 to 90 second little clips of tips and tricks and trading ideas. Probably two to three times a week on that, just in a real form, just like a couple of times a week, just to give out a little bit of information, education, like I say, a trading tip or something like that to my followers.
Is that screen capture then?
Yes, yeah.
Okay, cool. Yeah. So, and next steps for that business? Is it kind of more of the same, building on that, and maybe finding other mentors to join you, or? Yeah,
look, the idea is to build a community. I really think, trading is quite a lonely profession. There's a lot of, it's just you and the computer screen. I think having a community around you can really help, especially if they're like-minded traders, being through a similar journey, looking at the markets in a similar way. And again, it comes back to that emotional side of things. If you're going through a bad period, having somebody to sort of like sit on your shoulder and just like rationalize your thought process can really help, and that's what a community can do. So through my graduate program, once people have graduated and they're fully sufficient traders, they become part of my community. And that, so it's really to try and build that community. That's really what I want to do. Teach as many people as I possibly can, get the message out there, set the expectations, give that little bit of a different narrative that is often out there on social media and Instagram, especially of, that get rich quick, and just get a group of people that really understand that and help them towards their goals, really. That's sort of like the aim of Keyzone Traders.
Yeah, and sort of to be more grounded, I suppose.
Yeah, 100%. Yeah, exactly. Be more grounded. And as I say, you do have the option now of going through trader funding programs and stuff to get that funding, but to get funded and keep that funding, you need to have the core processes and skills in place. So it's being able to build those core skills and processes first before you go for these challenges and get funded, because otherwise you're just getting someone to cheat your test for you and you haven't got the ability to keep that funding anyway, so it's pointless.
Yeah, I think a lot of people don't know that, do they? That you know, you get your 50k or 100k account.
Yeah.
Okay, you pass the test, but can you maintain it? Because you've still got to follow the rules.
Yeah, exactly.
And if you break the rules, you're back to square one, kind of thing.
Yeah, exactly. And these funded trader programs as well, even once you get funded, quite rightly so, I might add, have very strict risk controls. And like I say, 100% agree with them being in place. But it's you have to, and again, this is why when you very first start trading, you need to have those risk controls in place, because if you don't have the right risk controls in place, as soon as you get that funding, you're going to lose that account very, very quickly. So it's being able to understand what your risk parameters need to be able to keep that account funded as well.
Yeah. Going back to your students and so on, what is the typical experience level of most of your students?
I mean, it varies, right? It can be from new beginners right the way through to somebody. I've coached people who've been trading for 10, 15 years with no success, sort of thing. But I would probably sit there and say, if I had to pigeonhole someone and like go, right, this is the stereotypical one, it would be someone who maybe has been looking at trading for about a year, 18 months, gone through a couple, maybe 1 or 2 courses, or tried to self-teach, but not really getting the consistency or anything like that. I think that sort of level is probably the general. So somebody who knows they want to trade, but hasn't quite got the skill sets, or hasn't found a way to be able to get them to where they want to. I think that's probably generally the skill set that most people have when they come to me.
Sure, and have you identified the typical kind of mistakes they're making? Do they repeat themselves again and again?
Yeah, I mean, again, it's probably the standard ones, that over trading, jumping from strategy to strategy, giving up on a strategy the second it hits a drawdown period. Not focusing on the right things, not having a correct, like it might even be simple things like not journaling correctly, not having a written trade plan in place to be able to hold themselves accountable to what they should be doing. Those sorts of things are all often very, you need to have that trade plan to give yourself the structure for when you're going into the markets. Every business has a business plan. Trading, if you want to take it full time, is your business, so you need to have a plan as to how you're going to move forward with that. So yeah, I think there are often a lot of similarities. Obviously everyone's unique, everyone's different, so they'll be slightly different to the individual, but yeah, generally speaking, there's a lot of similarities between them.
Great. Ross, where can people find you?
You can find me at www.keyzonetraders.com. I mean, obviously you can find me on the social medias. My handle is @KeyzoneTraders. And also I'm on Discord. I have a free community where I give out weekly analysis. So I analyze Bitcoin. I don't actually trade cryptocurrency myself, but I know obviously there's a lot of interest in Bitcoin these days. So I analyze Bitcoin for the week ahead. I analyze the S&P, and I analyze the DXY, which is a dollar basket, to give an idea of how the dollar may perform in the FX markets over the week ahead. So I do that weekly, and I give out free education, tips, videos, blogs through that free community as well, and that's all done via Discord. So yeah, www.keyzonetraders.com, or come and find me on Discord, would be great.
Brilliant, thanks Ross.
Thank you very much for having me. Cheers, Nick.